All right, everybody, welcome to weeks 47 and 48 of Selling Weekly Lottos. Every week, I sell what's the equivalent of lottery tickets to gamblers in the stock market by selling options, covered calls, and cash secured puts. Okay, let's just get to it. All right, this last 2 weeks, I made $8,875. Pretty wild, pretty wild. All right, let me just show you the positions. All right, let's say week 47. Let's see week 47. Boom! All right, so what you can see here is the chart, okay? Let me just say, first of all, this is not technical analysis. I'm not predicting the stock price based on past movements, all right? This is all the lines are based on the options I sold. So this one was a covered strangle. You can see the two yellow lines, one going up, one going down, all right? I bought 100 shares of Micron, MU, all right, at 477 or so, and I sold a covered call, a 525 covered call. All right. At the same time, I also sold a 450 cash secured put. All right. What that means is Micron, if it went to 525, I would have to sell the 100 shares. All right, that I bought at 477. And if it went to 450, I would have to buy 100 more shares. All right. And you can see that red dotted line there at 455 or so is the break even. That's the point where the 100 shares I bought, if it went to 455, that $2,000 in unrealized losses would be more than the premiums I received, which was around $2,000 for selling the option. So at 455 or lower, I would be losing this position. All right, but you can see that the stock actually grinded up the whole week, and I eventually got assigned, and I had to sell my 100 shares, which was over 5,000, about $5,500, $5,600 profit there, because I sold the shares that I bought for 477, and I sold them at 533 because I got 800 premium from the 525 calls. And then I also was able to buy back the cash secured put that I sold for 1,200 or so, and I bought it back for 65 bucks. That was another $1,100 gain. So total was about $6,700 in profits in week 47. All right, let's go ahead and look at week 48. Hoya! All right, so week 48 was only cash secured puts. I was doing the wheel, which is when you sell your shares, you're trying to sell cash secured puts to get the shares back if you're assigned lower than where you sold them. So I actually chased the stock. So I first sold at 475 puts. All right, that lost 80% of its value in a day. So I bought them back. And remember, when you sell a contract, losing the value is actually a profit for you. All right, so I bought those back for gains, and I immediately sold a 500 put. All right, those also lost about like 70-80% in value in one day, so those profits for me. And then I closed that position, and my last chase was a 540 put. These all were for the same week, and that also lost about 70-80% of its value in one day. So I also bought that back. And after that, I couldn't chase anymore. I was basically priced out of MU at that point, because MU eventually went to like 680. And then by the end of the week, it went to like 740 or 750. So at this point, I will probably not be getting my shares cheaper than I sold them at 533, at least for weeklies. I'm priced out of weeklies on this. But the good news is I was at least paid for the trouble of being available to buy shares. All right. So what happens next? Now that I'm priced out, I got three options. I can either wait for a pullback, right? That involves not making income while you're waiting, right? And then number two, I can be willing to buy in higher, right? I can say, hey, I sold at 533, but maybe it's okay to buy at 650 again. Or I can go longer than weeklies. I can say, okay, I can still sell a 550 put for June, and I can get my shares back at like 530 or something if it gets there by June, right? But those won't be weeklies anymore. All right, so those are the options. All right, so let me go ahead and show you the theta and delta, because a lot of people ask me about the delta and theta values. All right, so here you go. Oh yeah. All right, so I actually did memorize these this time. So the delta on all the options were less than 30, around 20 to 30, and all the theta was actually insanely high. I haven't seen theta this high, and I haven't seen delta theta ratios this high. The theta were all above $1, okay? And with theta, you can pretty much, whatever the number is, that's about how much you're gonna be making per day times 100 shares, as long as the stock stays sideways. So all of them were above 100, all right? $1 times 100 per share, all right? And even one, that last 540 put, that was a $2 theta value there. That's about $200 per day you'll make if the stock stays sideways, all right? Let's see, what else do I gotta talk about? Oh, metrics. Let me just show you the metrics real quick. Boom! All right, so still not gonna focus too much on the metrics because I'm gonna do a full metrics post at 1 year, talking about all the metrics. This one, I just wanna highlight the new floor yield right there, all right? So I added that one in because my current total yield is around 63%, right above floor yield. That's only taking my average weekly risk, all right, and dividing it by the income that I've made, all right, or dividing the income by the average weekly risk, I should say, right? But this isn't really that fair of a metric because I have set aside $250,000 to do this, right? So I'm not using all my money every week. So the floor yield is gonna be a better metric to show how I'm really doing over the course of this last 11 months. That when you divide my total income divided by the total amount I have available, 250,000, that brings the yield down to about 23%, all right? And the reason I think this is important is because it takes some finesse to not use your whole account value to sell weekly options, just in case, like a few months ago, the market was falling, and if I used all $250,000 in 1 week and the market fell, I would be locked out, all right? I would be locked out, and I wouldn't be making any more income after that. So you got to use a little bit pieces of your total portfolio, and that takes some finesse. All right. Other than that, that's pretty much it for me. I will say one more thing. I left a lot of money on the table this last 2 weeks. So this stock, Micron, it's been in a parabolic rally. It's been going crazy. So I will say what I did this week by selling options, selling covered calls, selling cash secured puts, it was not the best thing to do. It was not. If I just bought the 200 shares, all right, at 475 2 weeks ago and held for 2 weeks, I would have made over $55,000 instead of under $10,000. So this was not the best thing to do, but I know me, and I would have never held with a 50% return, burning a hole in my pocket. I know me, I would have sold. I probably would have sold at 500, okay? So I still think wheeling and selling options is the better strategy for me, for my preferences, all right? But it was the wrong thing to do this last 2 weeks because of how much Micron pumped, and the opportunity cost was around the $45,000 range there. All right, guys. But well, best 2 weeks for me since I started this 11 months ago. I'm pretty happy about it. Can't complain about making profits. All right, guys. That's it, and I will see you in a couple weeks. Peace.